everybody, my name is Ling Person. Today we're going to be talking about insurance business models. So we've talked a lot about insurance, but on the consumer side. So there are a lot of reasons why we think that insurance company is a charity, right? A lot of people may think about that because here's the thing. Basically, it gives you money. You pay for a premium and it gives you money. You might think that you're having the better advantage here, but when you actually dive into the business model, you actually think that, oh, I'm not really benefiting that much compared to these wild companies, right? Again, it's not charity. They would charge you for an amount of money that's called as a premium, and that premium isn't usually very cheap. So it could be very uh different up to each people, right? Like some people may earn from premium more because usually here's the thing, it is different for different types of insurance. But let's say you buy a health insurance in Vietnam could cost almost 30 million Vietnamese dong, which is pretty much, right? And so you guys can see that you're not paying just a normal amount of it, but there's a trade-off that you would get maybe possibly a higher amount of money when you achieve that. So maybe it's almost like when you give your money into a banking account, and it's almost like you're betting on it. So whether or not do you benefit is up to you. But again, not all the time will you benefit largely from it. Because again, here, companies, how do they pay you for your insurance? They would take all of the profit that if earned from premiums from all people, right? So all forms of people. It would use a percentage of it, almost like 50% or something like that, and pay for the charges, pay for the what is that? Business insurance. So when a consumer is needing a charge of insurance, that is when they take the profit from their premium and pay for that. And it's also going to establish policies for these form of customers. So it's gonna have policies on, oh, okay, when you first enter, you cannot have your medications already there, right? So that means if you are buying like a cancer insurance, but you already have cancer, then again, it's very inevitable that the business will have to pay you money. So that's why it's going to establish that, oh, we're not going to provide you with the cancer insurance because you already have insurance. We're not going to profit from you. We know that. So that is also another policy. Or sometimes they could offer policies that, oh, you have to pay like this, you have to pay like that, just so you can receive that amount. So they're going to be having serious policies regarding the money that they're charging and the money that they're giving for, because again, it is very big amount of money. But also, if the premium amount of money that they have in total is smaller than the amount of money that they have to pay, that is when the company achieves bankruptcy, and that is when you as a customer could file for a lawsuit or like a case where legal people are going to protect you and still get your money back from your insurance. So that is why having a business model in insurance field is pretty much risky, because again, you have to balance up very greatly between the amount of premium and the amount of money that you pay, and you need to make sure that the premium is higher, yet you can still provide the best insurance. Because again, in business these days, in this economy, people are crazy with insurance, and there comes the problem where insurance is very competitive. So that is why, as a business in insurance, you have to make sure that first, you still benefit. Secondly, the price is not crazy, and thirdly is that you have to be able to mitigate the risk whenever there is a risk that's going to happen. So with all of that said, let's look back again one more time. First, again, these types of business is not charity. It's going to take money from your premium and it's going to pay you back. And usually it's going to establish serious policies to make sure that you're not cheating, you're not 100% having the ability to get the money at the end of the day. Because again, they want themselves to still benefit so that they could give the money to other consumers too. But then that is the problem where they still have to give some groundbreaking policies, yet still ensuring that their prices, their policies are being fair. Because again, it's very competitive in the field of anything in economic these days, right? So that is why it is so important. So that is all about business models regarding insurance. Thank you for listening and goodbye.